Hello guys, hello. Yes, welcome back to the channel. So today I have a recap on EURCHF. I have EURCHF on the screen, but before I start, you would want to go and check my previous videos. I think it was last week, someday last week. I think Monday. I don't know. I'm not sure. I think Sunday. There's a video of just look for the video about EURCHF. I gave you a buy on EURCHF when price was here, and look how many pips we have moved so far. And guys, this is the same strategy that I use for price action, top down analysis. So far we have moved 119 pips. We moved 150 is 150 pips. I'm going to show you. I'm going to post the screenshot. I think on that video I told you I was in the trade already. By then it was around 90 pips. Yeah, but I'll post it for you, the screenshot. Today is Saturday, so the markets are not running. However, I showed you the screenshot, and I'm going to put it here somewhere such that you can see the profits I am in currently. Okay, so this is EURCHF. I'm going just to take you through the process and how I managed to capture all these pips on EURCHF. I still have more pips to capture from here up to here. I'm looking at around 300 pips. So I'm remaining with around 217 plus 119. That is already 340 something, 350 pips that I'm remaining with. So it's just a matter of patience and waiting for price to get in the area or the ranges that where you want it to, and then you take your trade. Then do what? Relax, go and do other things. You don't have to be on the charts every day. Take your trade, relax, go and do other things. Okay, so now what do we have here? It is EURCHF. So I'm going to take you through how we managed to enter this trade. So now this is EURCHF. What is the core elements of this strategy? We use top-down analysis, pure price action, and support and resistance. Support and resistance has been around for ages, but I don't know why some people despise it. And it is one of the best way and easiest way for beginners to trade. But before I start, I had forgotten, guys, first subscribe to the channel. I'll give you 5 seconds. You subscribe to the channel, and then we begin. 1, 2, 3, guys. Subscribe. I see the subscriber count go up, and then we begin. Okay, we shall go straight forward to the analysis. If you have not subscribed, guys, please subscribe, because it helps me with the numbers and the algorithm. Okay, so now what do we see here? We see price bouncing on this area. Remember, this is the weekly time frame. Price came here, bounced off with a very high buying momentum, tried to retrace to the area, still bounced off with a very high buying momentum, bought for almost 2 months, almost 3 months up to here. When it came, it broke down, came back, broke down with a very selling momentum. When it came here to this level, it rejected and then bought up to this price area here. I know someone will just say that this is a week. Yes, it is a week. It is a week, but when you go to the daily, these are candles, very big candles. When you go to the 4 hour, these are very many candles. On the weekly, it is just a week. And also at some point, this week here was a full candle, full red candle up to down here. Full red candle, like you can see this one. Some point it was a full red candle up to down here. Then it rejected, then bought. Then we retraced, came back to this area here, this support zone here. It rejected, then came back, retested, and bought massively up here. Now we have come to the same area. What is the core value of the strategy? When we come back to this area, we are anticipating a buy. We are thinking that we are going to buy again. Why are we having those thoughts? It's because we have been buying from this previous area before, which means that whenever the sellers push price up to here, the buyers come in and take price up. This is the price level where the buyers are interested. This is where the buyers are interested from taking their trades. Whenever you come to this level, they see it at a discount zone. This is their discount pricing. Whenever you're here, they were interested in buying this asset and they are going to buy it massively. You came here, they were interested in buying, they bought it massively. Came back again, they're interested in buying, they bought it massively. So when we come back again, they are monitoring this area and they will be like, oh, we are there again, let's now go and buy. Like they bought before massively, they're also going to be interested to buy here. However, do we just enter the trade far? No, we don't. What do? You can first mark where they last ended there. That is likely where you're going to put your stop loss. So now that you have marked there, what next? Now that you have marked there, what next? You're going to wait for the behavior of price action here on the daily and the 4 hour where you're going to take your entries from. And where is the target? The target is the previous weekly. However, this one is going to be having two targets because price stopped here, and here. So where is the average? You can put is around here. So your first target was going to be from here to here, which is around 200 pips. That is first level target. When you reach there, if you have 10 lots, you remove 5 lots and leave the 5, or you can remove like 7 lots and you leave the 3 running to complete our target up to here. So what do? We go to the daily, and someone would say, let me show you, someone would say, but now the candles are broken here. How do we see, how do we know that it is going to move? Simple. Line chart. The line chart never lies. You're not going to see price skipping in the line charts. It's going to be fully accounted for. Everything is going to be fully accounted for. So you drop the line chart if you're not seeing price well. So you come to the daily. What do you see on the daily? My internet. Okay. What do you see on the daily? You see price came down and then it gave you some bullish pressure. So this would be enough for me to enter. However, we shall go to the 4 hour to get precise entry and get some small stop losses. What do you see on the 4 hour? You see something like a head and shoulder. You see this is a head, this is a shoulder. Then we went up to form a head and then we went up to come and form another shoulder. Go to the line chart. You see it is very well. This is a head, this is a shoulder, this is a head, this is another shoulder. So what do? You don't expect price to come and take out your head. If it takes out your head, you're in a downtrend. However, we don't expect price to go there. So you enter from here, closure of this green candle, and then your stop loss is going to be below this line that you marked on the weekly here. You see on the weekly where this week is, you put the line on these previous 5 sections. This is where you put your stop loss. Okay. Oh, but now the stop loss is huge. Why is it 57 pips? You people always want stop losses of 5 pips, 10 pips. That's why you're not profitable, because you put your stop losses so tight, you are so afraid to lose that you even put your stop losses so tight they hit it and then go in the direction that you had predicted. You're so afraid of losing, the fear of losing. That is what is causing you to put tight stop losses. This is a financial market, so volatile. This is a $7 trillion market that is traded every day. Why would you think someone is interested in your 10 pips stop loss? That someone is going to respect it. Chances of respect or disrespecting that 10 pips stop loss is they are very high, because this is a market of many like this is a currency market. A lot of money is involved. So if you're just trying to risk as little as you can, just because you fear to lose out, you're going to lose out more. By the time you add your losses, those 10 stop loss pips will be in 100. So just put enough stop loss. So now we have entered our trade and we monitor it on the daily time frame. So we play price forward. We see price goes up. This is not our target. Our target is here. Target is around here. It is around there. Price goes up, gives you some profit, but comes back in, puts you in the drawdown. Play price forward. Now it gives you profits. Already there, you are in profits. So you play price forward, consolidate there, consolidates, goes up. Good. So now this is where we move our stop losses to break even. Then we go forward. You are already in profits, move your stop loss above break even, like 20 or 10 pips, where is reasonable, and then hold your trades to the first level target. So price is going up. That is where I ended. It did not hit our first level target. It is retracing now, but we know it is going to go there. So even after retracement, we're still at 132 pips. You can choose to move out from there. If you entered a lot size of 1, that is already $1,000 in how many days? 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. In 1 week, you're already in $1,000. How many people make $1,000 in 1 week? And that it depends on your lot size. If you entered 10, that is $10,000 in 1 week. Guys, wake up. Forex trading is going to make you rich. Okay, so that is simply how the strategy goes. So I'm going to be putting I wanted to show you my profits. I want to put them somewhere, but I don't know. Anyway, I'll ask my editor to put them somewhere that you can see them. But I think I showed you, check the previous video, I showed those profits there. So subscribe to the channel, comment, like and share. In case there's anything you want to ask, put in the comment section. I'll be answering all the questions. Subscribe to the channel, guys. Okay, that is all. Peace.